Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I am thrilled that you're here. And I know you're going to get tremendous value from the gentleman we're interviewing today. His name is Mike Woodfield, and he's a co-founder of Obsidian Capital, which is, he's partnered with a very good friend of mine, Glenn Gonzalez, who's a member of my multifamily boardroom mastermind and just a really great guy all around. Now Mike has been responsible for asset managing over $300 million in multifamily. He's overseen the renovation of over 2,200 units. And that's really what we're going to dig in today to is asset management and this renovation management as well. So welcome to the show, brother.
Hey, thanks for having me on. I appreciate it.
Yeah, let's have some fun today. I know you've worked with Glenn now, what'd you say, 6-7 years, something like that? Yep. I love it. Yeah, he's just a solid guy. And really you are blessed to have him as a partner, as I'm sure you know. Let's dig right in if you don't mind, because I don't think we need to really belabor your background because it's extensive enough that let's just get in and see what we can do to add some value. So let's talk about, and this is an area that a lot of owners and really operators fail, and that is in the execution of the asset. And so let's talk about what an owner or operator should look at when they go and visit an asset. Let's start there.
That's a great question. And, this is the question that I get a lot from people that reach out to me. The first thing I do when I drive up is I'm looking at the curb appeal. You could spend millions of dollars on the interior of property to get rent bumps. But if the exterior looks like garbage, or if there is garbage on the exterior, those things can become a huge issue. I always say clean is free. So there shouldn't be any trash. It doesn't cost you any more money to pick up the trash. And also, a huge one is landscaping. Are the bushes overgrown? Is the grass kind of getting this tall, knee high? Has it been a while? And then when I get into the leasing office and I'm with the manager and I have a captive audience, I cover the 4 Ps is what I call them.
Okay.
And the 4 Ps are people, product, price, and promotion. And if you go to and do a site visit at one of your assets and you cover people, product, price, promotion every time, you'll really cover, I would say, the bulk of what you need to when you're doing a site visit. And it will take a little longer. It'll take a while, but really quick, as you get more experience, you can quickly go through those. And so,
well, let's drill down on them.
Sure. So people, who do you have leasing your apartments? Is this person a good salesperson? I don't like the term leasing agent. I like the term sales agent, right? Or salesperson, because that's what they're doing. They're doing a sales job. Is your manager a good manager? Is she managing your asset? She's really the CEO of a potentially multi-million-dollar company, right? Rather than just a 250 unit property. That 250 unit property could be worth millions of dollars. So is she fit and educated enough to run your multi-million-dollar asset? Right. And then the assistant manager, is she, how do I put it, a hound dog? Is she out there collecting the rent? Is she out there talking with people daily? Is she doing her job? And the maintenance guy, is he on top of things? Is he dressed well? Does he have a list of 1 million work orders, or is he the type of person that never leaves work without the job being done? So you got to make sure you have the right people at the property, which can be very hard. And then product, as you know, what are your units like?
Well, hold on. Before we move on, if you don't mind.
Of course.
When you're taking over an asset and there's some existing people. They may want to stay. They may not want to move on with the management company that's currently managing it. And you guys are vertically integrated, correct? Right. So you have your own management team and management company.
Right.
So when you're evaluating those people, what sorts of things do you look for? If you can speak to that a little bit before we move on.
Oh, that's a great question. Really, depending on the area that I'm buying in, if it's a tertiary market, I'm very careful about not to let people go that have been there for a while, because the talent pool is very shallow in those markets. And so you have to be maybe not as picky as like a market like Dallas or Austin or some of these other, core Orlando markets where there's more people you could grab and bring in. So that I'll note that. But beyond that, you want somebody that can communicate very well. Somebody that takes their job very serious and loves the business. Property management isn't easy. In fact, it's probably one of the hardest businesses to get involved in, because those people are the front lines of defense. They take it on the chin every day. And
they don't hear from owners and residents when they're thrilled most of the time. Right.
No. Yeah.
it's a little brutal. Right.
They hear all the bad news. Owners are mad because things aren't going as planned, and the residents are mad because they have a leaky faucet or a light went out or whatever. Right. So I look for somebody that can handle those situations and take the pressure. And it's hard to tell. I mean, you've owned businesses and owned properties before, Rod. You know as well as I do that finding the right people and putting them on the bus together is the hardest thing in business. Right. But I, generally speaking, when I'm going to take over a property, I don't like to do a clean sweep fire unless truly I evaluate that the property is in the position it's in because of the people that are on site, which has happened.
Oh yeah, it happens a lot. Yeah. No, that's good. And the reason I bring this up, because every business, including an asset like this, which is a business, is really nothing but people and systems. That's right. So we're starting with the people, and we are going to get to the systems here in a minute. After we're done with the 4 Ps here, but people is one of the hardest things. And so let's just continue just a little bit more on this. What sorts of things do you do to empower and motivate and validate your people after you've hired them?
So the first thing you do is you give them a budget, right? You give them a budget, a pro forma, and you give them an asset management plan. Now, if I give you an asset management plan, I fully expect you to know it and read it and have it memorized and know exactly what's in it. And
talk about what the components of an asset management plan might be. I know we're keeping going down rabbit holes here, but this is important stuff.
We're drilling down to something very important here because it's something that people fail to do. An asset management plan should have a list of the key players. So maybe your insurance broker, the construction management, whoever's managing the construction, the owners, the property manager, the regional manager, and emails and cell phone numbers. So everybody can get a hold of each other. The next would be the pro forma. So it needs to be clearly stated. This is what the pro forma is. This is the expectations. And it shows year over year growth and expectations there. And then the first year's rents need to be clearly stated so you can see what kind of bumps you're going to get. You wouldn't believe how many properties I've had where the property manager says, yes, I've rented them out for what you told us to rent them out for, and they haven't been. So clearly stating that and following up to make sure that's happening is almost key here. And then the renovation budget and the line item renovation, even like a Gantt chart of when you're going to, for example, restripe the parking lot, or when you're going to trim the trees. How many units on the interior a month are expected to be renovated? And so you need to give them a detailed, I even go down to what color of poles we're going to put on the cabinets. That way there's just no mystery, even in the backsplash color and the pattern, right? There's a picture of it. That's what it's going to look like. And that's it. If they have input, they can send it back and say, I think we need a different backsplash. That's kind of ugly, Mike. You're not really an interior designer. And I'm like, well, fair enough, and open to feedback. But once it's in that plan, that's the plan. And then below that, I actually do a signature block. So I put all the owners, the property manager, the regional manager, and construction, all the key players.
Accountability.
They all sign it. Because Ron, when I go up at an asset and I tore the asset and the backsplash is a different color than what we had originally decided, I say, let's pull up an asset management plan and look at that together. It's a very simple, well, this doesn't match. What happened?
Right.
And then it's like, well, you signed it, you agreed to this plan, right? So it's all accountability. And going back to your empowerment question, when you give someone a plan, you give them a plan to succeed, right? And
sure,
it's now just their choice to go and carry out the plan. So when you don't give them a plan, I think you give them a plan to perhaps fail.
Sure. Fail to plan to fail. That's right. Pretty straightforward. Yeah. Okay. Love it. All right. So let's go on to product then. Okay.
The product, one thing I really like to do, I pull a report that you can pull out of any of the softwares that basically just shows the units that are vacant and how long they've been vacant for. So you'll be shocked as an owner to pull this report and see that you've had unit 302 vacant for 150 days.
Right.
Yeah. And maybe the first, they're like, well, that's the model. Oh, okay. Got it. But maybe not. And I circle the ones that have been vacant the longest, and I say, let's go walk those. So we go and we walk those units, and I always, I got all my senses present, maybe on
right,
the walk.
Smell, sight, everything. Yeah, you guys couldn't see him touch his nose, but yes, it's very important. Right, I mean,
because you may walk up the unit and it's next to the dumpster. And it's like, well, no kidding, no one wants to live here.
Or it's got an old pet odor, or
cigarettes, or it could be anything, right? So it's like, okay, we need to get an ozone machine in here. You need to put a plug-in the wall, like Febreze. Like, let's fix this, Or it could be they walk in and they say it's ready and it's just not.
Right.
Very common.
Right.
Which is so silly, So Glenn and I have a saying. It's the old Ronald Reagan 1988 saying is trust but verify. So we always trust, but we always go and look. And if you're not motivated enough as an owner to go and verify, then you're going to struggle. So we always go and look at what the product looks like with our own eyes, because I figure my standards are pretty high. If I'll live there, then probably most other people would. Maybe, there may be some other folks that are like, no, I wouldn't live here. But if I would live there, then 90% of people would. So yeah, I want to see it with my own eyes and say, yeah, this looks good. So, and you set a standard every time you do those walks. Maybe the manager isn't up to standard, but you go and set the standard with her on those walks. And the next time you come back, she knows, like, okay, this is what their standard is.
Yeah. Yeah. No, absolutely. You absolutely set the tone for what they can expect in the future. Okay. Love it. So now let's, I guess, move on to price, huh?
Price. I mean, this is one that gets a lot of people in trouble. People complain about occupancy issues and such, or maybe you're 100% occupied. And you have a price issue either way, right? Maybe you're underpriced or you're overpriced. Pricing is not too difficult. You've got to pull market surveys. You got to make sure you're shopping the comps constantly.
Now, who does that? Who does that at your complexes?
So the property managers do, and usually they have leasing agents go out and shop the comps. But I'll do it. I'll either pull a CoStar report, or I'll call these properties myself if I'm suspicious that our rents are too low, or if they're too high. I have a property in Austin right now where we have this issue. Leasing velocity isn't where we need it to be, and I have a meeting with the asset manager that we hired and the property manager, and we're just.
You mean your regional?
Yes.
Okay.
And we're just going to sit down and we're going to talk through price. I think that we're overpriced. for that market. And so we're not.
Well, Austin's one of the hottest markets in the country. So if you don't have leasing happening, something's definitely up.
Yeah,
right?
Exactly. And I
or
think
the product's wrong. It's small
it
units.
Right. I don't claim perfection. It might be all. We might hit all 4 of these, and oh man, we got some changes to make. So price is something that you can also set your own market rent. If you have really good staff, they can push those rents and push those rents and push those rents.
Right. So one of these people could actually push some of the other the price and your ability to promote and take a product that's not the greatest, but their sales ability. So these things kind of work together.
Yeah. It's like a chain. They're all connected. It's like a chain circle, because if your product sucks, then you're not going to be able to promote it. Right.
Mm-hmm. Right.
And if you don't promote it, then it doesn't matter what the price is, and it doesn't matter who the people are. Right. So, but the price is an issue for sure. And when you're underwriting and you're making these assumptions, and I've underwritten hundreds of deals. Right. You've got to really take a step back and say, am I just trying to make this deal work, or is this actually going to be able to happen? Right. And you really have to pull all the emotion, the acquisition fees, the everything out of it. I want to own a certain unit count. I want to go to Rod Khleif's conference and boot camp and be able to be like, guys, I did it. Right. But you got to pull the emotion out and say, can I achieve this? And because in underwriting, you set yourself up for failure in operations all the time. So you really have to be in tune with what that market can bear. But if the market can bear it, you ought to be getting it, so don't undersell it either. Right. Okay. So we talked about price. So how do you promote? Promotion is the 4th P. Promotion, advertising, marketing. This goes back to curb appeal, right? Like I said, clean is free. My least favorite thing is when I see trash on a property. Lawn. It drives me crazy, because that does not cost us anything to pick up that trash. It should never be there. But surely people come on to a property and see trash on the ground and say, I'm not living here. Sure. No, that's the first thing your maintenance team should do. Actually, that's typically what we do at our assets. Or you have a porter, if you've got a large enough asset, that's all they take care of the grounds. Yeah. All right. Yeah. That's right. So, and promotion. So, and then I've had experiences before. I'll give you some bad experiences with our assets where, we dumped $2.5 million into a property in San Antonio. It was almost 400 units. And I just Googled it one day, and we had like a 1.7 star rating. And I went and looked through all the stars, and they're all from previous ownership. And I'm like, you know what, why did we put $2.5 million into this property and not fix the reputation? Yeah. That was a really bad idea. I mean, we just, we've got an asset in San Antonio under contract right now. We're raising 13 million for. We're close to being done, but it's and it's a screaming deal. But that's one of the reputation is so freaking important. And sometimes if it's so bad, you really need to rebrand. Which guys, so you don't know what that means. That means to rename it. Which is there's an expense associated with that. You've got signage and so on and so forth. But sometimes that's what you have to do. Yes. But wow, that's painful when you realize that after the fact. That is painful, right? So Googling the property, seeing what your reputation is online. The other experience I had was actually hold on one second. Let me just flag something. So guys, what you do is you tell your leasing people that every single person they sign up, or every time they handle a maintenance call to send a link to Google reviews and say, hey, would you say something nice? Because the previous management really hurt the reputation here, and we just need your help. And you might even bonus them or spiff them, certainly congratulate them when they get those reviews. So anyway, I just wanted to mention that. It's so important that you proactively do those reviews, even when they're in the office. Just say, hey, can we go on my computer and have you do a review real quick? Whatever it takes to make those happen. Anyway, please continue. Sorry, I interrupted. 100%. And right. We've done that we have softwares we've used that have helped us get our reputation up. Mm-hmm. One thing that we've also done, and something that to be careful about, is when you do it on the computer in the office, Google flags you after a while.
Oh, yeah. IP address. Yeah.
IP
Okay.
address. So make sure you send them an email and just follow up and have them do it. If they had a good experience, people are inclined to do stuff like that. And
Right.
for leasing agents, leave me a good review. My bosses love to see it, type of thing. So that's huge. The other thing is when you do a nice interior renovation and new leasing office and a new pool deck and a new pool furniture, get some professional photos done.
Mm-hmm.
It costs you $150 and someone will come out with a really nice camera and they'll take some nice professional photos and they'll edit them and then put those on apartments.com, put them on Google, put them on your website.
Right.
We owned a property for a year and the renovation was done. And I got on our website and there was not updated photos. And I'm like, what in the world is going on here? Put the updated photos on our website,
Right.
What are we advertising to the public, right? So it's being on top of those things and making sure that people are really seeing what you're selling. Yeah. So it ties back into product and how much you can charge in your price and are your people doing the promotion. So
sure. And you can push pricing if you've got a good team and that place always looks great. You can be the top of the market. You absolutely can and get away with it. But all those pieces. I love the 4 Ps, buddy. That is really insightful. Appreciate you bringing that up. So let's shift into asset management as it relates to the sorts of metrics or KPIs that you track at an asset. So guys, just when you buy a property and you give it to a third-party property management company, your work is not done. You are managing them. That's asset management. And there are pieces of what they do that you better have your finger on and be paying attention to. So let's speak to those next, Mike.
Okay. Yeah, you're right. Your job's not done. You take a lot of time and getting this asset management plan. You do a kickoff meeting and everybody signs the asset management plan and you go to carry it out. You've got to follow up and make sure you're tracking what you've put in play, right? You've got to carry out the plan and execute the business plan. So one thing I look at every month, and I have a spreadsheet basically with just about 15 checklist items that have to be done every month on each property. Some of those items is a rent tracker. So I go in every month and we track the previous lease that was at, let's say, unit 101, what they were paying, how long they were there for, and then what we leased it out today and how long that is, and what is the difference? Did we go up in rent? What was the percentage we went up and why? So maybe this was non-renovated and now we've renovated the unit. What is our rent bump? And I do that because really, if you drill down to that granular level, you know exactly what's happening on the income side of your property. It's right there in front of you. I mean, you've got all the pieces that are relevant right there in front of you. Yeah, exactly. So, I can say with absolute certainty that at Glenn and I's property in Kentucky, 258 units, that we're getting $164 rent bump on all of our new leases. Mm-hmm. I know that $164 because I've looked at every lease and I know exactly what we're getting. Now this is cumbersome and takes time, but heck, if you've just bought one property, you're not that busy. Right. Right. I trust me, I've asset managed 15 properties at a time. Okay. I know what busy is when it comes to doing this. So if you have one property, this doesn't take but an hour a month to track these leases. Mm-hmm. And what you find over time is that you correct mistakes right as they happen, rather than looking at a P&L or a rent roll a month after it happened, mm-hmm. which is what happens in property management. Mm-hmm. They close the books on the 26th. You get the profit and loss or the financial summary on the 15th or 20th of the following month. You're playing a month behind. You're driving, looking in the rearview mirror instead of proactively. And you know what? When things are tanking or going downhill, it takes 2 or 3, 4 months to correct those actions. So if you're looking at it live and tracking these things, you're able to get on the phone with the property manager and say, hey, I noticed you moved 2 people in this week at $100 below our pro forma rents. What happened? Mm-hmm. It'd be a very simple explanation. But they have an explanation, right? Or it could be a mistake. Yeah, or it could be a mistake, right? And then you've corrected it, and now it didn't happen on 20 units.
Right.
So that's the first KPI. The other one is occupancy, of course. You want
By the way, let me just do the math on that for a second. I just want to let people know the ramification of that $100 mistake on 20 units. So let's see here, divided by 0.045, let's say 4.5. That's on 20 units. That $100 mistake is a $500,000 valuation mistake. Okay, just FYI. Okay, just to give you an idea of how big a deal this is, guys. Okay,
it's a big deal. It's a big deal. You know, if it's $100 on one unit at a 4.5 cap, you know, no sweat. You know, it's $45,000 or whatever it is. You know, okay. You know, guys, look, we can get it next time on a renewal or something. We'll bring them up to market, but if it's, I promise you, if you're not tracking it, this stuff just goes and you're in it for a year. Right. You know, so you've got to make sure that you're staying on top of that. And once you show these management companies or your property manager or your regional manager that you are on top of it, they will feel inclined to be on top of it. If you show them what's important to you, the hope is that that will become important to them. That's the hope. If that happens or not, I don't know. But that's been my experience. So that's pricing. So you're looking at, you've got your rent tracker. What else? The other thing I look at, I said, is occupancy. I make sure that, you know, we're in budget. So the budget might be 85% because you're renovating. It might be 70% because you're renovating. You know, you've accounted for that and have the cash to ride that out. Or it could be 95% and you're pushing rents because you're stabilized. But you've got to track the occupancy. The economic occupancy is also very important. Right. By the way, guys, if you don't know what that means, economic, so you've got physical occupancy, people in units. Economic occupancy is the people that are actually paying. Okay. Right. So that's almost more important, especially since COVID hit. You know, I mean, we saw a lot of folks not paying their rent. Right. So economic occupancy. By the way, just as an aside. I got the same. It just happened today. It looks like the Supreme Court. So you guys will know when we talked about this, but I'm not sure when this will go live, but there's some good news. Thank God. It looks like the moratorium got reversed. Yeah. So, Supreme Court struck it down. I saw that this morning. So I mean, so the economic occupancy is something I look at, and those are metrics. And then the other thing I track, Rod, is the budget versus actual. You know, if we gave a budget, how close are we on budget? You know, so expenses, operating expenses, CapEx for sure. And then also just total income, other income. You're looking at all the line items to make sure that you're close or in budget within some variance, you know, a percentage or two. So those are a lot of the metrics that I look at. Okay, well, let's talk about maintenance for a minute, because that, you know, you can be bringing people in the front door, but you're losing them out the back door because you're not taking care of them. So what do you look for in that part of the you know, of your equation? That's absolutely true. So I also track all the renewals. Okay. So I want to see what kind of bumps we're getting on the renewals, but also how many people are renewing, what percentage of people are renewing our property. And, you know, if it's 25%, well, that's not that great. And a huge red flag that we've got this gaping back door that needs to close, or else no matter how much we lease, we're never going to make money. I mean, so let's talk about how we close that back door and some of the pieces. So I know we spoke about maintenance. You know, one of the things you want to look at is how long your work orders are open. How long are these people waiting to get something fixed, right? What else would you be looking at? You know, that's a huge thing. That's probably the biggest one, actually. That is, because you know, these people don't want to move. I mean, some people have to move and they'll leave, but if someone's just going to move to another apartment, they don't really want to move. It's expensive. Right. They have to break the lease. It's a pain in the butt. You know, moving sucks. Right. Yeah, it sucks. And then you have to go and pay another deposit, and you have to move your furniture, and no one likes it. So you should be able to keep people there for a while. It's how they were treated. So some of these are intangibles, like you have to be there to see how did the staff interact with you. Right. You know, one thing, I was talking to a gentleman. He said that whenever anybody walks through the door of the leasing office, he always wants the leasing staff to stand up and greet whoever walked through the door.
I will tell you something. We will go and mystery shop other assets. And when I go in an asset and that person behind the desk jumps up and says, "Hey, how you doing?" Yeah. That's a freaking type. That's the personality type that we want, you know?
That's exactly right. You want someone that's engaged and friendly.
Right.
I'll draw a parallel. I read somewhere that, doctors that have really good bedside manner are less likely to be sued over malpractice.
Absolutely.
Despite what they did or, what malpractice.
Absolutely. In fact, I'll give you a great example of that. I had this woman that put in, I had my teeth redone and I had some caps put on and I had all these root canals and it's because she did it wrong. And I had to sue her. And so we were going to the mediation and she came up to me and she put her hand on my shoulder and she said, "I'm really sorry." It was like, you know what? Fine. Just pay what my costs were. We're good. And so just that compassion, and you're going to get tenants that went without air for a couple of days or something. You've got to be compassionate, for God's sakes, and then do everything you can to make it right too. But that bedside manner counts here as well, I guess, is the point I'm making.
People are emotional. About their health, of course, right? But people are emotional about where they live.
Right.
This is their home, right? This is where they live. This is where they're raising their children. We look at it at a very 30,000 foot level as owners. But this is where they rest their head at night. And, so yeah, they're going to be emotional about when a light goes out or, the water's off and they can't bathe their kids for school the next day. These are all big things to them, and I don't blame them. So you want somebody that's there to be able to not just be a hard hand, but that can understand and listen to people and resolve issues.
Right.
So, I would say how quickly are the issues resolved, whether it be a work order or it be, a noise complaint or something like that,
all the above. Now, do you do anything to create a culture there? Do you do anything to create like a home feel? Or do you guys do anything like that?
Yeah, absolutely. They do a lot of, and things have changed over the past year, but we're getting back into pool parties and movie nights. And, we just, in our property over in Kentucky, they just did a movie night. And the reason why I know that is because they gave me a bag of popcorn that they were handing out to everybody as I was leaving.
Nice.
They rented a big blow up screen and it was a back to school bash that they had.
Very cool.
There was a barbecue and it was just, fun thing for these residents. And, they captured photos and they threw them on the Facebook page and said, join us next time. We had a blast. So this type of thing creates a community and it makes people want to stay. They're treated well. The ownership obviously cares about doing things for the community. It's not all about the money. And people appreciated that.
Yeah. Yeah. No, love it. Well, listen, brother, I really appreciate you coming on the show today. You've added a tremendous amount of value. And we went deep on a couple of things, which are really helpful for anyone once they get an asset. So it's great to meet you. And I just want to thank you for coming on, buddy.
Yeah. Hey, Rod, I appreciate your time, man. This has been fun.
Absolutely. All right, buddy. Take care. We'll talk soon.
All right.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our Warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our Warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon. Apply to work with us at mentorwithrod.com or text CRUSH to 72345 and we'll set up a call so you can check us out and we can check you out. That's mentorwithrod.com or text CRUSH to 72345.